Hello, everyone. Well, is the ECB just playing the same tape over and over again at every meeting? Once again, they disappointed market expectations and failed to make any changes in their monetary policy. President Draghi's comments were largely the same as after the last two meetings, at least. The markets learned that when he makes comments like, all options remain on the table, really what it means is they haven't decided to use any of those options yet, which is why they're still on the table and not in their hands. Moreover, it turns out that the ECB's forecast for inflation at end 2016 is just conveniently 1.7%, just near enough to their target of close to but below 2% that they don't feel compelled to make any changes in policy now. As a result, the euro hit a new high for 2014 against the dollar, as did the Australian dollar, New Zealand dollar, and Swedish krona, and cable hit a new closing high. This was despite a lower than expected jobless claims number and rising rates in the U.S., although factory orders did fall more than expected. In emerging markets, the market continues to believe that the Ukrainian crisis is over. EM stocks rose and the dollar lost ground against almost all the EM currencies we track, the exceptions being the Brazilian real and the Russian ruble. Today is going to be another day of waiting. This time we're waiting for, of course, the non-farm payroll figures for February. The market consensus forecast has fallen to 149K from around 155 or 160 a couple of weeks ago, but probably the real consensus is even lower than that. The forecast includes the ones that were made a couple of weeks ago. If we just look at the median forecasts made in the last 2 days, it's 136K. Forecasts on Twitter, which would be even updated even more rapidly, are even lower. The median there is 122K. So it's really hard to say what will be a surprising figure. Now, a third negative surprise, whatever a negative surprise is with a range like that, a third negative surprise in a row for the non-farm payrolls could convince people that the cold weather was only an excuse and show that the labor market's really facing problems. That, I think, would be negative for the dollar. Now, looking at the volatility when on non-farm payroll days, euro-dollars moved higher over the following week after 4 of the last times that the non-farm payroll missed estimates. It was unchanged once and lower once. I'm not sure it makes much difference, though, because the results when the figure beat estimates were largely the same. When the figure beat estimates, the pair with the biggest increase in volatility is dollar-yen, followed by dollar NOK and dollar krona, Danish krona, then cable, and finally euro-dollar. On negative surprises, the increase in volatility is much less. The biggest increase again is in dollar-yen, followed by dollar CAD and dollar Swiss. Other G10 pairs see really no major increase in volatility. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.